If you're having a late filing situation for a Form 1065 or a Form 1120S, I have good news for you. There may be penalty abatement. I want you to stick around till the end of this conversation to learn more about that specific FTA provision. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Suit Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about IRS Form 1065 or Form 1120S first time late filing penalty abatement. And this is penalty abatement for small partnerships or S corporations. So S corporations and partnership returns are pass-through returns because S corporations and partnerships usually don't pay income tax, right? They don't pay income tax at the business level. Rather, those entities, they will pass income deductions, credits, etc. to shareholders and partners, right? And this is how they report this on the Schedule K1 information statement. Shareholders and partners then report Schedule K1 on their own income tax returns and pay the tax they owe at that level. And the IRS matches the information reported on S corporation and partnership returns to information reported on the income tax return. So they kind of use, they're trying to reconcile the data, right? And so to make sure that small businesses comply with filing rules, the IRS assesses failure to file late filing penalties. And the penalty for not filing a partnership or S corporation tax return can be really, really steep, folks. Really, believe me. So here is what you need to know to offer penalty abatement for small partnerships or S corporations. Now, first, let me kind of give you an overview here. The first time penalty abatement, the FTA waiver, it's basically an administrative waiver that the IRS may grant to, remember the key word here is may grant, not will grant. May, there is a possibility here. So the IRS may grant that FTA waiver to relieve taxpayers from failure to file, failure to pay, and failure to deposit penalties if certain criteria are met. So the policy behind this procedure is to reward taxpayers for having a clean compliance history. Everyone is entitled to one mistake, right? We all get that. So I'm showing you right now on the screen the link to the IRS resource if you need to read more about that. And this can be very good for you. So individuals and businesses may request FTA for any failure to file, failure to pay, or failure to deposit penalty. FTA does not apply to other types of penalties such as the accuracy-related penalty, returns with an event-based filing requirement like Forms 706 or 709, and information reporting that is depending upon various filings. So to qualify for the FTA waiver, a taxpayer must meet the following criteria. There are three. Filing compliance. So you must have filed a valid extension for all required returns and cannot have an outstanding request for a return from the IRS. You got to have payment compliance. In other words, you must have paid or arranged to pay all tax due. This can be in an installment agreement if the payments are occurring. And you got to have a clean penalty history. In other words, you must have no prior penalties except a possible estimated tax penalty for the preceding 3 years. 3 years, that's a key word here. So speaking about the clean penalty history, let me give you the consequences of filing returns late. And I want you to pay attention to this trifecta. There are three important elements to remember when you are thinking about filing late. Nobody wants to be late, but things happen. But when they happen, I want you to be aware of the consequences. First thing you have to know is that it's illegal not to file. The law requires your business, your S Corp, your partnership to file every year that it has a filing requirements. So the government can hit you with civil and even criminal penalties for failing to file a return. Number one, criteria number two, or consequence number two, you must prepare to pay a penalty. So for a return where no tax is due, the failure to file late filing penalty is assessed for each month or part of a month that the return is late or incomplete up to a maximum of 12 months. So the amount of the penalty is $200 for 2020 returns multiplied by the amount, by the number rather, the number of shareholders, partners in the S corporation or partnership during any part of the tax year. Think about it. That's $200. And those amounts change all the time. And if tax is due uncommon, the penalty is the amount stated above. In other words, the $200 plus 5% of the unpaid tax for each month or part of the month that the return is late, up to a maximum of 25% of the unpaid tax. So the penalty for filing late is 5% of the taxes you owe per month for the first 5 months, up to 25% of your tax bill. So the IRS will also charge you interest until you pay off the balance. So folks, this is just a grim scenario. Nobody wants to be there. And my piece of advice here is just file. Just file your return on time. And if you can't, you can amend or you can extend. So the third consequence is that you may be held personally liable if you are a partner. So the first consequence, it is illegal not to file. Second consequence, you got to prepare to pay a penalty. And third, you may be held personally liable if you are a partner. So this penalty is assessed against the partnership. However, the partners or investors are held individually liable for the penalty for the extent to the extent that the partners or investors are liable for any partnership debts. Let me give you an example. If partner John is a general partner and is personally liable for 100% of the partnership's debts, then partner John is personally liable for 100% of the penalty, and the IRS has the authority to personally collect from partner John. So the failure to file penalty for S corporations is assessed against the S corporation, not against any individual shareholder. So shareholders are not directly liable for the penalty. Now, I've been talking about that penalty, and I know that I actually spoke about the penalty a little earlier, but here I want to really elaborate because this show is entitled Late Filing Penalty Abatement. So we really have to understand what we're talking about in terms of penalty. What's the exact amount? So a late filing penalty is assessed against the partnership if the partnership fails to file Form 1065 U.S. return of partnership income by the due date, including extension. Okay, this is clear as it can be. Now, the penalty I'm talking about can also be assessed if the return is filed without all the necessary information, unless there is reasonable cause. And I'll talk about reasonable cause later on. There is a reasonable cause that justifies it. Now, if the return is both incomplete and late, only one penalty will be assessed. So the incomplete return penalty will be assessed unless the return is more than 12 months late. So according to the IRS, the penalty is between 200, as I said earlier, 200 and 250. It really depends, between 200 and 250 for each month or part of a month for a maximum of 12 months. The failure continues, multiplied by the total number of persons who were partners in the partnership during any part of the partnership's tax year for which the return is due. So you have to do the math, because this numbers can add up pretty quickly. Of course, I'm just talking about small partnerships, small S corporations, but if you really think about it, if you have 10 partners, let me give you an example. A 10-member partnership will be penalized between $2,000 and $2,500 if their return were 1 month late, and between $20,000 and $25,000 if that return were 12 months late, right? So again, the numbers, they can add up pretty quickly. And at the end of the day, remember that as corporation or Form 1065, what's happening here is that the debts, the income, the losses are passed through. They're passed on to the individual partners or as corporation members, which means that the penalty at the company level will be paid eventually by the members or owners. So you want to avoid that. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. I'm still having a conversation today about IRS Form 1065 and Form 1120 as first time late filing abatement, late filing penalty abatement. So, what is the penalty abatement? So, in order to abate this penalty, the partnership or S corporation has to meet a few requirements. And there are actually 5. And the IRS is very adamant at making sure that those filers, those applicants actually satisfy, they fulfill those 5 requirements. Number 1, the partnership or S corporation must consist of 10 or fewer partners or owners. So a husband and a wife filing a joint return is considered one partner or owner. Because in this case, you have what the IRS called a QJV, a qualified joint venture, right? So that's number 1. Number 2, the partnership or S corporation must consist entirely of U.S. resident individuals or the estate of a deceased partner or owner. Number 3, each partner or owner has filed their individual tax return on time and reported their distributive share of partnership or S corporation items. Number 4, each partner's or owner's items of income deductions and credits are allocated in the same proportion as all other items of income deductions and credits. And last but not the least, the partnership or S corporation has not elected to be subject to the consolidated audit procedures under IRC Internal Revenue Code 6221 through IRC 6233. So if these 5 conditions are met, and remember, all of them must be met, all of them. If these conditions are met, then the IRS will presume reasonable cause when filing a request for a penalty abatement. In other words, the requested abatement will be granted without question as long as all the requirements are met. Abatements for partnerships that fall outside the requirements that I said earlier may still be considered, but reasonable cause would not be assumed and must be proven by the petitioner or the taxpayer. The petitioner if you're using a tax preparer. Keep in mind that requests for penalty abatement will automatically be denied if the partnership or S corporation has elected to be subject to consolidated audit procedures, right? So the penalty can also be reassessed if the IRS finds that any partner was not a qualifying partner, any partner filed late, and if any partner failed to report their share of partnership income on the tax return. Very important. So LLCs taxed as partnerships may also qualify for penalty abatement. And let me quickly talk about penalty abatement request by phone. You can actually request the abatement through by phone or by mail or letter. All right. Let's first talk about by phone. So, a tax practitioner or a member of the partnership or the S corporation may call the IRS. The IRS at 1-866-860-4259 to request FTA if, for example, in the case of a practitioner, if his or her client's case is not being handled by a specific compliance unit, like examination, collection, etc. So if the case is being managed by a specific unit, then the practitioner in this case should call that unit to request FTA. Now, the rules are the same if you are not a practitioner, but you actually handle taxes for the partnership. Like you are an employee of that partnership or S corp and you handle taxes for them, the rules are the same. So one thing I want to say here is that so basically you as a business owner can also request an abatement if you are the person who files Form 1065 or Form 1120S on behalf of the company. A tax practitioner, though, will need power of attorney authorization to request penalty abatement for a client over the phone. So that's Form 2848, power of attorney and declaration of a representative. I'm showing you this form on the screen right now. Very important. So the IRS personnel who takes the call should be able to pull up the client's account, determine if the FTA criteria are met, and apply the waiver during the call. And the taxpayer will later receive a letter in the mail indicating that the penalties were removed based on FTA criteria. So if the taxpayer doesn't receive the letter within 30 days from the date of the call, it is advisable to follow up with the IRS. And one thing I want to say here is that calling the IRS is often really, in our research, is often really the preferred approach to request FTA, as often penalties can be removed quickly during the phone call. However, at times, the penalty amount may be too high for the IRS to abate over the phone. So, if so, the tax practitioner or the return preparer should write a letter to the IRS to request FTA. Additionally, if the IRS abates penalties over the phone, it is always advisable to write a letter to the IRS to confirm the conversation. Very important. And you need to include the date of the call, the agent's name, and the agent's identification number. What about penalty abatement request by mail or letter? So instead of calling the IRS, you can also write to the IRS to request FTA on behalf of your company. Include all relevant information in the request, so the taxpayer name, identification number, tax year, period, tax form, and penalty type and amount. So you need to clearly state that the company meets the FTA criteria. So consider attaching client transcripts or your own company return transcripts that proved filing payment compliance and a clean penalty history, as well as a valid power of attorney if you are a practitioner. Be sure to include page numbers and the taxpayer's name and the last 4 digits of their identification number on all pages sent to the IRS. There are other considerations to think about also when we have a convo about IRS Form 1065 or Form 1120-S, first time late filing penalty abatement. Now, FTA only applies to one tax year or period. Very important to mention that. So if a request for penalty relief has been considered for 2 or more tax years or periods, and the earliest tax year periods meets FTA criteria, penalty relief based on FTA only applies to the earliest tax year or period. And so what will happen here is that a penalty relief for all subsequent tax years periods will be based on other relief provisions, such as reasonable cause criteria. All right. And one thing that you have to remember here is that if the IRS has not assessed the penalty, for example, a client is filing a return late and failure to file, if a client is filing a return late and failure to file and failure to pay penalties still apply, the taxpayer may attach a penalty non-assertion request to the late filed return. And if the tax preparer has already paid the penalty, if the company has already paid the penalty rather, what will happen here is that the company on Form 1120-S or on Form 1065, the company can file Form 843, and they can file this form to request a refund. We're showing you right now on the screen here the Form 843. It's titled Claim for a Refund and Request for Abatement. And if the IRS does not grant penalty relief, you want to consider taking the case to appeals, actually. This is just, in our research, this is the best way. Appeals may make a different decision based on other factors, such as hazards of litigation. Remember, though, that if each case is very different, but if the CPA, in other words, the client advocate, doesn't ask for abatement, guess what? He or she cannot get relief for the client. It's just as simple as that. So clients, if you are doing this, again, this advice applies to you if you're filing your own company's tax return. But if you are handing over, if you're outsourcing that task to a practitioner, so you want to make sure that you follow through and you follow up, because as a client, you can save thousands of dollars on penalties, often with a simple phone call or letter to the IRS, and you want to rely on your tax professional to advocate for you. And I want to talk about, so let's say you call the IRS and everything is fine. They authorize the abatement. Now it's time to actually get back into compliance, right? Because the law says you must file all required tax returns. Now, if you haven't met that obligation, you should get back into good standing with the IRS ASAP, folks. So for most people, the further back in time you go, the less reliable your records are. If this is the case for you, don't worry. There is something you can do about it. You or an authorized tax professional acting on your behalf can research your account at the IRS. So What will happen here is that your IRS transcripts will help you uncover and report all the income that's been reported to the IRS, and you can do something about those penalties. Let's say for example that you reach out to the IRS and talked about you placed an abatement request, and you couldn't get it over the phone. You could actually do things via mail. And when I'm talking about abatement, you can actually claim penalty abatement request due to reasonable cause, penalty abatement request due to first time penalty abatement or a clean compliance history. You can also request this based on safe harbor penalty relief for small partnerships with 10 or fewer partners that meet certain IRS criteria. And I've been talking to you throughout the show of something called reasonable cause. What is it? So reasonable cause, the IRS will consider any sound reason for failing to file a tax return, make a deposit, or pay tax when due. Now, so sound reasons, if established, include fire, casualty, natural disaster, or other disturbances, inability to obtain records, death, serious illness, incapacitation, or unavoidable absence of the taxpayer or a member of the taxpayer's immediate family. Other reasons which establish that you used all ordinary business care and prudence to meet your federal tax obligations but were nevertheless unable to do so. And remember though, and this is very important, and we have seen this question asked several times on many forums, including Reddit and Quora. A lack of funds in and of itself is not reasonable cause for failure to pay on time. However, the reasons for the lack of funds may meet reasonable cause criteria for the failure to pay penalty. So if you haven't filed your required small business returns, you won't have many options until you file them all. Very important. So delaying or not filing at all is a bad strategy. It's really, really a bad strategy. It's because the IRS, at the end of the day, they will charge you. In other words, they will assess a steep penalty for filing late. All right, folks, this is it for today's conversation. I hope you enjoyed it. I hope you learned something from it. I was talking to you today about IRS Form 1065 or Form 1011S, first time late filing abatement request. So I gave you an overview. I spoke to you about the consequences of filing returns late. I gave you an overview of the penalty itself, the penalty abatement, the fact that you can request the abatement over the phone or by mail letter, and gave you some kind of tips on getting back into compliance. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.